Okay, our second lesson on costing. We're going to look at the marginal costing bit now. So we're going to look at the bottom three, maybe it's not the break even, but definitely the marginal cost and contribution. So just quickly remind yourself of those 6 definitions from last lesson: direct cost, indirect, variable, semi-variable, fixed, and stepped. See if you can think of examples that fall under each one. If not, look back on your notes from last lesson. Okay, so marginal costing is an accounting technique that businesses use to help with their decision making. These are mainly short-term or medium-term decisions they have to make, such as is it better to make a product yourself or to buy it in? Should we take on extra work? Stuff like that, which is going to be our final topic in accounting this year. So we'll look at that the next couple of weeks. But in order to get onto that, we need to look at 2 new words. We need to have a look at what marginal cost means and contribution. So marginal cost just means the cost needed to make one more unit. Now, you'll recognize me saying that from last lesson. So marginal costs are very much linked to variable costs. The costs involved in making one more unit. Contribution. Well, contribution, the definition is it's the selling price minus any variable costs. So it's what's the contribution when you take away the variable costs. So the graph on the side, the picture is hopefully demonstrating what's happening here. So if that's my sales, to get my contribution, I take away the variable costs needed to make that amount of sales. Now we can do that as a total or as per unit. And now, I said last lesson, there's going to be a link between that formula we talked about at the end and this marginal cost and stuff. So we said last lesson that if I saw revenue and I take with the total costs, and that gives us our profit or loss. Now, if we just do the costs in 2 different steps, we get different stages. So we start with our revenue and we take away the variable costs first. That leaves us with our new word, contribution. We get the total contribution. Then if we take away from that the fixed costs, then we must be left with our profit or our loss in that case. So there's our kind of 5 stages and what's going to form a marginal costing statement. So start with revenue, take away variable costs, that gives us our total contribution. Take away fixed costs, and that'll give us our profit or our loss. So the layout of our marginal costing statement looks something like this. Although this is something that's used in management accounting, so that's used to help a business. It doesn't have to be produced for the government or anything like that. So the layout is adaptable. However, this is the main one we use. So we start at the top with our sales revenue. We take away the variable costs, and that gives us our total contribution. We then take away the fixed costs, and that gives us our profit. Hopefully, if not, it will be a loss. So let's look at an example and see how it all fits together. So pause it so you can read yourself first. So the Wyvern Bike Company makes 100 bikes each week, and its costs are as follows. So direct materials, £3,000, direct labour, £2,500, indirect costs, £3,500. So the indirect costs, remember, that could be stuff like the rent, electricity, salary and wages, etc., etc. The direct labour could be getting someone to actually make the bikes. So it says here, the investigations into the behavioural costs has revealed the following information. Direct materials are variable cost, that's obvious. Direct labour is a variable cost, again, that's quite obvious. Of the indirect costs, 1,500 is a fixed cost and the remainder is a variable cost. So first thing I would do in the exam, I would look at what the indirect costs are, 3,500. 1,500 is fixed, so the rest must be variable. So £2,000 must be variable. So I would split that 3,500 up into those 2 different numbers: 1,500 fixed, 2,000 variable. So in fact, it's the first thing I want to do. Yeah, so straight away, split that up. I've grouped these together in one color because they're the variable costs. I've done the fixed cost, sorry, that's just fixed there, 1,500 fixed. I've done that slightly different color. I've highlighted the fact that it's 100 bikes, that's going to be important. And I've also highlighted the selling price of each bike, because again, that's going to be important. The first thing we want to do is calculate the marginal cost of producing each bike. So remember, marginal cost means the cost needed to make one more bike. So we're just going to look at the variable costs for this. So to get the direct materials, direct labor, indirect costs, we need to get the total cost for each one and divide it by 100, because there's going to be 100 bikes. So that's what we'll do for each of them. Divide each of those costs by 100 to get £30 direct materials for each bike, £25 labor for each bike, and £20 indirect cost for each bike. Add them together, and we get £75 marginal cost per bike. So it costs £75 to make one extra bike. Okay, the next thing it wants us to do is show the expected contribution per bike. So as the form just remind you, contribution is just the selling price, take away any variable costs. So the selling price per bike, if you look back, you'll see that it was £120. The variable cost, well, that's a marginal cost for one bike. We just worked it out as 75. So we take it away, we get the contribution per bike is £45. Yeah, so part of that will be profit, part of that will be fixed costs. And the final thing we want to do in the question is prepare a marginal costing statement to show clearly the total contribution and the total profit each week. So I'll give you the layout, and I want you to have a go so you can spot where the different numbers will go before I show you. Okay, so at the top we'll have a sales or revenue. So for the week, there's 100 bikes sold in the week. So £120 times £100 gives me £12,000 for sales. Then we're going to take away the variable cost, remember, because contribution is sales, take away variable costs. So each of the three variable costs, just from the question, I'm just going to list them. So direct materials, 3,000, direct labor, 2,500, indirect costs. Remember, 2,000 of that was variable. I'm going to add that together, and that's going to give me 7,500. And I'm going to take that away from the 12,000. Now I'm using a two-column system like you're used to. So the left-hand side column for when we're adding stuff together, and the right-hand side column for the totals. So 12,000 take away 7,500 gives me a total contribution of 4,500. So from that week, I've got 4,500. Some of that will go to the fixed costs, and the rest will be for profit. So the next thing I'm going to do is I'm going to take away any fixed costs. Now I've only got one of them, so I can stick that straight in the right-hand column, so 1,500. I'm going to take that away, and I'm going to be left with my £3,000 profit for the week. And that's all there is to a marginal costing statement. So can you have a go at the questions yourself now? So keep looking back at the video to remind yourself of the different definitions of marginal cost and contribution, and to double check the layout.